Hello, everyone. Happy Sunday. Simon is here with AvaTrade, and we're starting our weekly webinar, your weekly trading plan. Of course, as usual, I want to welcome everyone, returning listeners or visitors, and of course, for the new people, a very warm welcome and a few words about the webinar. It's pretty much says it all in the title. And the idea is really to prepare us for the upcoming week, to create a structure, to create a plan, to create a more organized way of trading, which doesn't guarantee the results, but definitely improves our trading results. As in everything else, if you plan, if you create a structure, if you create order, you have better chances to succeed. And as I usually say, you plan your trade and then you trade the plan, and that really works much better than without it. So this is me, Simon Friedman. For those of you that don't know me, my name is Simon Friedman. I'm a senior account manager with AvaTrade. My experience in the trading world is over 22 years now. I started in the June 2000 when the dot-com era was in the middle, and I was a proprietary trader in a few Wall Street firms for about 11 years, and then after that, I moved on and I was training traders, educating, mentoring, and as I said, now I'm working with AvaTrade, and I'm happy to help the customers. What's the agenda of the webinar is pretty much the same thing as we do usually. We talk about indices, stocks, commodities, FX, and trying to make sense of things that are happening. And these are the ways of keeping in touch with us. And of course, use all the information available. You have Telegram channel, you have Twitter, you have a YouTube channel that's being updated with a lot of new materials all the time. And before we go further, of course, as usual, this is the risk warning. You can read it. You can read the full statement on our website, and it's pretty much the idea is that what we do here, it's of course not to do with advising or anything of that nature. It's a purely educational process that we're going through here. So as I usually say, or pretty much you get information from everywhere, and you should use your own judgment. You should digest all the information and then try to make your intelligent decision in everything, especially in trading. So what's the big picture? That's what we start usually with. And it's pretty much the same. And I hope that we could throw away the war aspect of it out, but it's still there. It's not getting any better, unfortunately. I'm not going to focus on that. It makes me really upset. So I'm going to pass that. But it is affecting this situation geopolitically, economically, affects the whole world. Because of that, of course, we have energy crisis. We have a threat of some countries starving. As of now, I think the latest report I checked, Ukraine this year exported about 40% less wheat than it did last year. So it's still there. It's still not being shipped, not being sent. And that's really affecting a lot of the parts of the world that are depending on it. So what else? It's the regular thing. We have central bankers. They had a meeting last week, and it's the same story. They're all trying to really fight the inflation that's been historically high, and they're trying to increase or raise the rates on interest rates to try to use that tool to bring the inflation lower, and that includes US, Europe, European Central Bank, UK, and pretty much everyone. So that's something that is there. And there's a huge struggle, and some say that the Feds, and they were saying actually before that the Feds really missed the boat. They should have started raising interest rate earlier. And but again, should have, would have. They need to deal with it now. Now, in front of you, this is the economic calendar. And again, I just want to bring it up. What I do, I take the high impact. You can see the impact, it's all in red. The high impact events for the upcoming week. And I encourage you all to use your time and really go into economic calendar and see what's relevant for you. There's medium impact, low impact. You can filter it by the country and so on. Again, some people are trading purely technical. Some people are trading purely fundamental, and some disregard any event. Some the opposite, really trade the event. So it's all individual. And I think since early 2000s, the technical analysis became very popular. And if you see any kind of analysts or brokers or anybody trying to present the trading idea or anything else, they all use technical analysis, and you can see charts on Bloomberg, on CNBC, everywhere. So again, I can share with you about myself. I'm mostly a technical trader, but I do pay attention to fundamental for many reasons. One of the reasons that really I really need to know what's happening, because the technicals are just technicals, and the fundamentals, if they're really strong, it will overcome the technicals anyway. Plus, I want to know what the public is thinking. I want to know what the public might be doing based on fundamental. That's few reasons, and of course, the main reason, I just don't want to be caught by surprise when certain things are happening, when certain events are happening, with certain announcements and numbers and figures are happening. For instance, this week we have the big day on Friday, which is non-farm payroll. For those of you that have experience in trading, you know that when the non-farm payroll being announced, the market is super volatile. I want to know that on that day and on that time it's going to be happening. It's usually the first Friday of the month. So this month, the first Friday was actually on the first, so they moved it. And also, we're having a 4th of July, the long weekend in the U.S. So Monday, the U.S. market will be closed. It's a national holiday, so it's going to be a choppy Monday. And I always use that word choppy because it is choppy when the U.S. market is closed. The volume is not there. The U.S. represents the biggest equity market in the world, so it really affects everything else. So what's happening here? On Tuesday, we have interest rate decision from Australia, Wednesday retail sales from European Union, PMI numbers from US, FOMC minutes that will be talking about monetary policies, which pretty much we know it since the last speech of Powell. And Thursday, we have trade balance Australia, ADP numbers. That's something that predates the NFP, gives us some kind of idea. If you can see, they expect on ADP 200K, and a non-farm payroll 250. So the number is kind of close. We have employment data from Canada, and we have CPI numbers on Saturday from China. So this is the economic calendar. Now let's move to the MT4 terminal, and we'll start talking about specific instruments. And I just want to give you a few figures, something that's all over the financial world. And I think it's important to have these numbers in mind, just to see what's happening. So the first half year of 2022 we just finished, and they have published these numbers for major US indices. So in the first half year of 2022, S&P 500 fell 20.6%, and this is the biggest first half decline since 1970, when S&Ps fell 21.1%. It's almost the same as 1970. Now, so just want to show you on the chart, and we're going to use the monthly chart just to see how we really fell from the top. Starting January, we really went down. So that's 20.6%. Now Dow Jones fell 15.3%, and it was worst first half since 1962, when it dropped 23.2%. So this is Dow Jones. Pretty much looks the same. So we had a drop, and Nasdaq. It's really shocking. Nasdaq fell the biggest ever percentage-wise. So 29% it dropped. So you could see the Nasdaq dropped more than the others by a lot. So that's again, I sound very pessimistic here, but these are the numbers, and it is dramatic. And again, what's going to be waiting for us, I really don't know. And again, this is the data provided by this source, and they say, just give the analogy that S&Ps, when it dropped in 1970, the second half of that year, we had a run to the upside 26.5%. So that's kind of encouraging. But on the other hand, Dow Jones, after dropping in 2008, it actually continued dropping the second half, another 22.68%. So it's kind of a very iffy where we're going to go from here. And again, we have to be smart. We have to be understanding what's happening fundamentally and geopolitically and everything else. But at the same time, we have to be, as a trader, trader has to be really adjustable and flexible, because we can be convinced that really things are dramatic and super negative, and kind of think that we're going to fall for the next 6 months. But anything could happen. We can run. I'm not saying we will be running to the upside, but what I'm saying, and I learned my own mistakes, still learning, so I still make them sometimes. You have to be super flexible and not stubborn ever in trading. And this is the situation that we're facing. Now, another thing, actually, I want to show you. I'm going to go back to the slides. So these are the 10 stocks of S&P 500 that lost 4.2 trillion in the first half of 2022. And I know later you can take a screenshot of it, and it's being provided by FactSet. So here's the 10 the biggest stocks, and you can just see how much they lost this year, and this shows what they gained the previous year. So just give you the Nvidia stock was up 125% in 2021 and lost 48.5% this half year. This is the Facebook, lost half of its value. You have Netflix losing 71% of its value. You have PayPal, 63%. These are the biggest losers. And this is the reality. I just thought I would share this with you. So let's go back to the charts, and let's start. So basically, the indices again. we had a Friday, all three US indices closed around 1% up. So they started actually the second half in a positive way. Again, a long weekend. It's normal, I always say, before the weekend. The traders try to take profits or get out before the long weekend or before the regular weekend, even, because you don't really know what's going to happen, especially in the shaky situation like war and everything else. So Monday the market will be closed, so we're back to full power trading on Tuesday. So we'll see. We're not going to make any predictions here, but just if you take S&P 500, trying to make sense out of it, really we had the 3 days, a strong sell-off. Friday we bounced, and it looks like if we were to look to the downside here, so Friday's low would be kind of an indication what's next. So 37.44 and a half, that was the Friday's low. And should we go up this upcoming week, I would be paying attention to this candle's high, which was 39.19 and a quarter. So we have kind of a nice channel here between the high of this, again, 39.19, and the low of Friday, 37.44. So at least we have a clear things. And again, we could be saying, we could be seeing a lot of actions here. Some traders would be selling short, knowing that there's still a downside pressure to the equity market, and some would be trying to buy here, as on Thursday and Friday we couldn't break below this level. So that's going to be very interesting to watch this week. Let's take a look at European indices. Also, there was a bounce on Friday. It looks like Thursday low could be also something to look for support. And FTSE had a nice run, and then Thursday was a sell-off. Friday tried to bounce back. Let's see what the news, what the upcoming week will bring. And China has been very, very strong. If you remember, we spoke about it, that we were between 13.5 and 14,000. The moment we broke on the second attempt, we broke, we continue higher. We're trading currently about the 200 moving average, and this tail actually confirmed it, that 200 moving average is a strong support. Again, China now, I think, is out of the woods. They have zero COVID cases. That's what they're really trying to get. So again, if this July brings a reversal and move to the upside, the US indices will continue, European as well, and China will be facing here at 15,260. This line right here could be the next resistance to test. As you could see, there was a lot of actions here. Was a strong support here from which we made a high, and then we broke below, and it was fighting around here, and then it became a resistance from which we made lower low, and it was a lot of actions after. We slowly but surely and consistently approaching that level here around 15,260. We'll be seeing what's happening there. So that's as far as indices. Individual stocks, we spoke about last week. We spoke about Tesla and Twitter. Tesla, it's been really weak, and again, all this fall started with the Twitter saga, when this started with the news that Elon Musk is buying Twitter, and a lot of uncertainty since then. Tesla, I think, lost about 40-something% of its value since then. Of course, not just because of that, because in general market was selling, but that was a big hit, this Twitter announcement. So let's see how it goes after that. Now, Boeing, interesting, it's really fighting this 141, 142, and there's a big war with Airbus. I think Airbus just announced at the end of the week that Chinese airlines are buying a lot of its planes, and I think Boeing is trying to catch up. it's been having a rough 6 months, like every other stock. And of course, we had a rough um, situations with the COVID when things were not flying at all. So let's see if we're trying to really break out of this 142 area. We might. Let's see what happens there. Uber. We spoke about Uber, and I reminded you this excitement a while ago by the CEO. So far, it's been super weak, but we established support around 20, and we're on the way up. If we're closing about 21 and a half, maybe next we'll face 23 and a half, and maybe somehow we'll get back into this channel and try to break through the top of this channel or the resistance around 26 and a half in the upcoming weeks and months. We'll be watching or continue watching the Uber as well. AT&T, as I mentioned to you, after establishing this triple support here, it's been very strong. And on Wednesday and Thursday, when the market sold out, the stock didn't sold out, and just repetition what happened before. And we are trying to break out of 21. This is the second attempt since the spin-off of a media by the company. So this time, if the market supports it, we might see a breakout and continuation to the upside. A lot of hopes from investors on AT&T. And banks, we spoke about banks that after passing the stress test, a lot of positivity. Some banks announced buybacks and increase of dividends. So we could see continuation to the upside like we already see on Goldman. So Goldman, Citigroup, JP Morgan looking to the upside after being beaten up pretty hard there. So that's it. We will wrap it up, the equity markets, and let's move to commodities. And last week, if I remember correctly, we spoke about soft commodities, wheat and corn, and take a look what happened with wheat. We didn't hold in the 930. There was a lot of actions here. We broke through it. And if you take a look on the weekly chart, we came right to the pre-war levels. And that's going to be very interesting to watch because like I mentioned to you in the beginning, the Ukraine is really exporting 40% less than last year. So I really don't understand fundamental. And again, speaking of fundamental things, we're not fully aware what's happening. And of course, trading in the financial markets, they call it manipulation, they call it speculation, and all other words. So it could be anything. It could be they're just pushing all the buyers out before they take it higher. Again, we're not going to speculate here and try to really predict things. But in a simple way, I was saying that 930 could be the level from which we're going to start the move up, like we did here, but it didn't happen. So the hopes of a lot of traders really vanished here. But we are facing another level here from which we had a lot of actions here and here after this a huge candle to the downside, we shoot up. So maybe around these levels, the buyers are really going to step in again and trying to move it higher. It's going to be an interesting week for wheat for sure. And corn, similar idea. We are facing a support around these levels here, around 612, 613, as we did here. After this support around here, when we continue and had the huge move to the upside. So that's corn. And cotton, I spoke with you about cotton, and cotton really interesting. I said last week that after this huge drop, we might see an upside move, and it looks like we are. It's kind of working here. We had a strong Wednesday, and then we had the red days on Thursdays and Friday, but we're still holding this move on Wednesday, which was a very strong move to the upside. So that gives us a hope or possibility that we continue to the upside. And of course, the opposite could happen, like the same thing wheat and corn, but at least we know where we stopped. So Wednesday low was 99.96, so pretty much $100 support here, and potentials to move to 110 and higher. So that's an interesting play, definitely worth watching. So that's as far as soft commodities. Now, gold has been weak, and it's all because of the strength of the dollar. If you can take a look, besides Friday, the whole week we're really stepping lower. We retested 1810 support. We failed it on Thursday. We closed at 1802, and then Friday was a very volatile day for gold. We went as low as 1784.4, and we ended up recovering. I just want to show you an hourly chart. Let's take a look around 1790, 1780. There were huge spikes to the downside, and after that, we came back around 1790. We started the recovery. It was a very nice recovery, and we did close 1810. So back to above 1800 on gold. Again, this week we'll be watching it, what's happening there, and of course we should be watching what dollar index is doing. We'll move to that in a moment. Crude oil also had a strong Friday after Wednesday and Thursday selling off as the market did. So it's all on the demand side as the market was weak. Crude oil moved down with it. The same thing with natural gas. Natural gas has been really stepping down. Take a look. We're stepping down from the highs of 963. We closed at 561, and this area here, as you could see, it's getting very busy. We had these levels around 5.5, 1, 2, and after a lot of actions here, we moved higher. And on Thursday, we retested and closed higher. So 5.5, it's probably going to be retested again. And buyers, it looks like they're stepping in every time it hits this level, as it did on Thursday and Friday. We didn't touch it again. So to watch this level and a possible turnaround. And fundamentally speaking, of course, there's a lot of actions by Russia. They're really using their power by being a supplier of natural gas to manipulate and push things around. And let's see what else is coming out this week as far as the supplying natural gas to Europe. So we'll be watching natural gas, of course. Copper has been super weak as the stock market was selling off. And again, we are approaching this area for a lot of actions around 3.5. As you could see, they were fighting this level and they couldn't break lower. A lot of accumulation happening. This is the weekly chart, and then we moved higher from here. So interesting. As I mentioned to you, copper has a big connection to China, as China is one of the biggest users of it for construction and manufacturing. So China has been super strong, and copper doesn't really follow it. So that's interesting, as the copper was following mostly the general equity markets, Europeans and the US, and maybe it's time for it to react to the upside. Again, some traders tried to get in around here, got disappointed, and some are still in. Some are looking to get in at a better price. But again, this level 3.5 is a crucial level that we couldn't break it before. We established a very strong support here. We really approach, we're getting close to it. And if you take a look, 1, 2, 3, 4 straight weeks to the downside. So very interesting, and we'll be definitely watching copper in the upcoming week. Palladium, as I mentioned to you, after a lot of build up here, we might see the move up, and we did. On Wednesday, we moved higher. We played with the 50 moving average. We tried to go below this level again, 1873. We couldn't. We kept on closing higher. So this is very promising for continuation to the upside. we'll be watching that as well. So with this, we'll wrap up with commodities, and let's move to Forex world. We'll start as usual with dollar index, and that's what I mentioned to you. Weakness in gold came from the strength of a dollar, and as we're following, of course, talking about the dollar index every week. If you remember, the support kept on moving higher, and the last time we spoke, we said that 104 was a strong support. We went below it with the matter of time that we're gonna jump right above, and we went back to retest 105. We had big tails on Thursday and Friday, and we did close a little bit shy of 105, 104.85 after going as high as 105.41. So 105 is kind of a magnet that it's holding the dollar index. Let's see, we have FOMC, we have other things, we have of course NFPs this week, and let's see what news are coming up. We might continue to the upside in the dollar index, and again the majors acting accordingly on the strength of the dollar. Euro dollar is weak, pound is weak, and dollar yen is starting to show its strength. Okay, and that's what I've been talking about every week. And again, I say I hope they do something. It's not that I'm involved with it in the politics in Japan or anything else, but I know that the economy, they're struggling a lot because of I always say it, they buy pretty much most of the commodities they buy from outside and paying it in foreign currency. So it costs them a lot to bring all those resources to the country, and they need to do something with the yen. And it looks like yen is gaining a little bit of a strength on Thursday and Friday. It showed the strength, and as you know, I like to bring it up when the yen gains strength. It's a good play, or at least something to watch and pay attention to. That of course dollar is very strong, but if the yen is getting strength, we need to take a look right away into other currencies and look for nice rewarding trades there. So as you could see, Aussie JPY made very nice move to the downside. The same thing in euro, the same thing in Swiss, the same thing in pound. It was a very nice move on Friday. If you can take a look on this range on pound JPY, it was wow, it was almost 400 pips move. At least it looks like it. That's tremendous move. So that's why it's important to prepare yourself and have a plan and take a look. New Zealand dollar. So all the other currencies besides the dollar had a huge move to the downside the past few days and the last week. So we'll be continuing watching and monitoring it. US and Canadian dollar, they were weak, but not as weak. So something to pay attention. And USD ZAR, as we said, it would make a nice move higher, and it did. And it came back to this level of resistance around 1630 after a few tails to the upside, really closing around these levels. So let's see what happens in the upcoming week. And Turkish lira, after getting strength here, it's been having a little bit of a weakness, but not as drastic. So we had continuous slow moves to the upside on the dollar Turkish lira, but nothing crazy. So again, if maybe something's changing there as far as monetary policy or something cooking to be changed. But after this move, we didn't really recover, and it was a long lasting move to the upside. So again, if the dollar shows a little bit of a weakness and we hear some good news from Turkey, we might continue sliding lower here. So that's as far as Forex. And let's take a look quickly what's happening in the cryptocurrency world. So Ethereum is holding these levels here. a little bit above 1,000, 1,070, 1,080, and Bitcoin is back below 20,000, and we had a few closing days below it. Doesn't look good. So again, if it continues lower, we just have to pay attention to the previous low, 17,582, and let's see if that holds. So far, big weakness. Of course, it went down. Besides all the crypto issues, it went down from the strength of the dollar and the weakness of equity markets. It seemed to be going in sync with that. Okay, so I think this is it. I want to thank everyone for coming and participating in our webinars. And just to wrap it up, a few things. Still inflation, still central banks are trying to fight it with all means, raising the interest rates. Geopolitically, we have Russia-Ukraine war continues and affects a lot of things. We all know what they are. And we have the upcoming week, we have NFP numbers, we have the job situation, and besides the two aspects that the Feds are watching closely, that's the inflation situation and the employment situation. And I think the NFPs will be showing what's happening, and definitely the Feds will be reacting to it, or at least making the comments on it. So, and again, to remind everyone, Monday, it's a 4th of July weekend. It's Independence Day in the US, national holiday. A lot of people are traveling, having fun, and markets are closed. And I want to wish everyone a great weekend, and get some energy, get some power, be ready for the upcoming week, stay happy and healthy, and we'll be back next week. All the best. Take care.